Hello friends, welcome to today's updates. Tata Motors share was under high pressure as JLR shipment to USA has been halted. Tata Motors share was among the most affected in the Nifty 50 index. As per the latest information, the company is looking for strategies to navigate through the latest 25% tariff imposition on UK goods. It is estimated that due to export halt to USA, it could lead to a 14% year-on-year drop in JLR volumes for FY26. During FY24, out of 4 lakh units sold globally, 32% was sold in US market alone. Over the last year, US market has contributed more than 20% for JLR's revenue. Tata Motors has fallen from its peak of 1,160 to the present levels, marking a fall of more than 50% over the last few months since the market started correcting in September 2024. Trent shares were also experiencing heavy pressure as the market reacted to Trump's tariffs. The stock has corrected 46% from its all-time high of 8,345, which it had achieved during October 2024. Analysts have provided bearish commentary for Trent recently, which is also one of the reasons for the share's drastic fall. Trent reported a 28% year-on-year increase in sales growth for the fourth quarter. However, it is still considered to be below expectation as the market was expecting more than 35% growth in revenues. As the revenue growth is not significant enough to justify the valuation of Trent, which was once trading at a valuation of 350 to 400 PE, the stock has seen a descending trend from its peak during 2024. The recent valuation of 111 PE is still considered to be very high value, which is not being justified by profits or revenue growth in the recent quarters. Infosys, along with other IT shares, has been under heavy pressure recently, reacting to the global tariff fears. These tariffs would have a negative impact on the IT spending and new deal win opportunities for Infosys and other IT companies in India, as the US is their largest market. The tariffs would result in high operating cost, leading to reduced spending in outsourced IT services. This is expected to put pressure on the revenues and margins of IT companies like Infosys. The investments in new age technologies, which is taking shape in companies like Infosys, could take a backseat as the projects to these companies may be delayed due to recession expectations. Infosys has a 58% revenue exposure to USA. Thangamayil Jewellers also experienced pressure as the broader market in mid and small cap segments reacted to the latest development due to Trump tariffs. 27% tariff on gems and jewelry industry has been imposed as part of the tariffs. Even though companies like Thangamayil Jewellers do not have significant exposure to US exports, the share has reacted to broader markets due to uncertainty. Thangamayil Jewellers is primarily involved in manufacturing and sales of jewelry and other accessories and products. US accounts for nearly one-third of India's 32 billion gems and jewelry exports. Metal index heavyweight Tata Steel reacted strongly to Trump's reciprocal tariffs. Entire metal index has been reacting strongly due to concerns of possible steel dumping from China. It is worth noting that China manufactures a huge volume of steel. Due to recent real estate crash in China, Chinese steel manufacturers could be possibly looking for markets where they could sell their steels at a much lower price. Steel coming from China are highly cost competitive, which could be one of the major concerns for companies like Tata Steel. There has been demand slowdown for steel across the world due to halt in spending by steel consumers. If you found this content helpful, please hit the like button to express your support and consider subscribing to the channel. Thank you for watching.